Good morning once again, and thank you for listening to the Haven Financial Group radio show. I'm Larry Kalvig, founder and CEO of the Haven Financial Group. Feel free to give us a call, 612-504-8400, or visit us online, havenfinancialgroup.com. All kinds of retirement tools on our site, a community site on there. We have clients that share recipes and, grandkids, whatever it is that there is. There's all kinds of tools. Visit us there. And our classes too, Kim, that we have on a regular basis, a variety of educational classes where we provide all kinds of tools and resources and materials that can prove very, very beneficial, especially if you're just getting started thinking about retirement.
Sure.
And that could be whether you're 30 or 50 or 70. It doesn't matter. You owe it to yourself to at least get the information.
Yeah, absolutely. I need to go on there and look at some of those recipes because I got a feeling those cookies are on there, and I need a good cookie recipe for the spring.
We do make fresh cookies, and they are well liked. And we are coffee snobs. And if you like good coffee, we get it every week. We get it many times. You guys have the best coffee here. That's intentional because I like good coffee.
Yeah, I like good coffee too. So that's a plus for me as well. Hey, let's talk a little bit about fixed income. First off, tell everybody, what is a fixed income strategy?
Well, it's turning that retirement saving into something that's guaranteed, hopefully for life, to supplement that Social Security check you're going to be getting eventually. Maybe it's to supplement that pension check that you may be blessed to have, and only like 10% or less have them nowadays. Mm-hmm. But we do come across quite a few with Delta people that have turned it into a pension or some other big corporations. So we do see them because income is the name of the game. And we talk about income, mailbox money, call it whatever you want to. And there's a variety of ways you can do that. We talked earlier about, using an income annuity, if that makes sense, whether it's stacking CDs or, having bonds and dividends or whatever it may be. And we like to look at all the options, but I think it's important for people to understand the different types of accounts that they have. Every week I talk about, we like to see retirees go into retirement with a good balanced approach. And it starts with having some good liquidity. Mm-hmm. I've said this, and some listeners are going to go, what in the world? 50 to 100 grand is what we like to see in a liquid cash savings, checking, CDs, high yield savings. Mm-hmm. 50 to 100, you go, why so much? Because there's always something. Right. And if the market's down, unforeseen circumstances, and I'll tell you, we see folks getting close to retirement with 5 to 10,000 liquid and everything at risk in the market. And that is not a good balanced approach. That's a recipe for a disaster. And if I could point out, banks and credit unions they're insured money. Okay. Mm-hmm. And that's important. The banks are FDIC insured, and credit unions, I can never remember the prefix for it, but they also have insurance to cover those bank accounts. Now, that's $250,000 per depositor for each account ownership category at each insured bank. Mm-hmm. So if you're over that, spread it out, make sure it's being insured. And a lot of times people are not. Now, some other not insured products that everybody's familiar with, and just you should at least make yourself known of it, is, mutual funds are not insured, stocks are not, stocks and bonds, and certainly crypto's not, of course. I don't know if that's a good retirement plan, but you may get lucky. Just be careful. Safety deposit box are not, they're not insured. Mm-hmm. Life insurance does have some coverage. Annuity does have some coverage. But I think it's important to understand what coverage, if any, and make sure you don't have all of it. I don't like the term eggs in one basket, but a good balanced approach, efficient and balanced.
I want to go back to this liquidity issue. You must have people who come in and say, well, Larry, I like to play the game, so I don't like 100 grand just sitting.
Well, I don't think it should be sitting, because today you should be getting 4+% in those types of accounts.
Okay.
And that's not bad, because for so many years you didn't get anything.
Right.
So yes, we're all about having money in the game, but liquidity is important. And then there's always going to be pros and cons, though. And we want people to look at that. So if I have a steady income stream or in fixed income, like these lower risk averse accounts, I'm probably giving up some growth. And that certainly is true.
Mm-hmm.
In addition to that, these fixed incomes are also have a higher claim to assets in bankruptcy. So, in the event of a company's bankruptcy, bondholders have first position and they have priority over stockholders.
Mm-hmm.
So that might give you some more comfort. Where on the other side of it, the cons of fixed income, you just want to look at credit and default risk exposure, interest rates. We've seen higher interest rates. So fixed income investments and bonds are, they're vulnerable to this interest rate risk or this volatile interest rate environment. Again, weigh all the risks, have a good balance, talk through the pros and the cons, the good and the bad.
Mm-hmm.
But the reality is you're going to need to turn that retirement nest egg for most people. I do come across those that have pension and Social Security that is more than adequate, and they're never going to touch their investments.
Yeah.
Well, then maybe a higher risk philosophy in those portfolios is perfectly fine. I think of a couple that was just in 2 weeks ago. They're both retired teachers, and we need good teachers. But they worked years in that industry. They both have Social Security. They both have strong pensions. They don't hardly have any expenses or debt, which is important. And they well, we're never going to spend this money. This is all for the grandkids.
Wow.
Well, their grandkids are in their 8 to 12 years old. They're fine with more risk. The problem is many listeners, many people we come across, they have no idea how much risk they're taking. They're vulnerable to the exposure. They have very little liquid, everything at risk, and the timing factor. We've talked about sequence of returns.
Mm-hmm.
The timing of what the market does when you retire can make a huge difference. So being overexposed can be problematic, very. Being underexposed could be problematic.
Sure.
But have the right balance. And the problem is most people don't know what that is.
Absolutely. That leads me to the idea that, there's a lot of people out there who maybe are listening to us, but they already have a plan, they have a portfolio, and they think they know what's going on. And they may be at high risk or, like you said, under risk. You guys have no problem with going through an existing portfolio and maybe working with someone, right?
We do it all the time. And again, I come from small town. Many of you know I've said I grew up on a farm by Wilmer. Mom and Dad still crop farm, although they're in Mexico this past week, so I hope they're soaking up the sun. I'm probably loyal to a fault. And you probably have an advisor, you're listening, and you have an advisor you've been with for 20, 30 years. We're not out to ruin relationships. However, we are out there educating and having people know that this is your retirement. This is your money. This is your life. If you're married, it's your family. What you choose is up to you. But sometimes, we as humans, we can become very complacent and we do the same thing over and over and over and over again. Yet if nothing changes and you didn't like the results when we had a market correction last time or the time before that,
right?
Yeah, you're doing exactly the same thing. Can you not expect the same results? And you didn't like those results last time. So don't get stuck in your ways. Maybe you'd be enlightened by a second opinion or a second option. There's no cost for it. It's what we do.
Mm-hmm.
And by doing that, we open up a lot of eyes to, I didn't even know this existed. Nobody's ever talked to me about this. I didn't know I was paying 2 to 3 times the going rate in a very competitive financial industry. I've never even heard of this. These are the comments that I and we at Haven Financial Group, we hear it all the time.
Yeah.
And that tells me they're getting a lack of attention. You're paying somebody.
Right.
You might as well get as much out of it for what you're paying. And right now, that's probably not enough.
So, Larry, as we wrap things up this week, we've been talking about understanding retirement income. We've talked about Social Security. We've talked about fixed income. What are your biggest takeaways from today's conversation?
Well, you worked all these years to create whatever that number is. And again, don't get caught up in the number, whether it's 50 grand or 50 million. We have everything in between. But that number is your number. And income is so very important. We have folks that have our high net worth, yet they're threatened to run out of money. We have people that have low net worth that are never going to run out of money. Mm-hmm. So we want all walks of life to be able to walk through this process with us or somebody to look at where is the income going to be generated, Do I have enough to retire? When do I run out? How do I avoid running out? What are some things I could be doing that I'm not doing? Again, these are all the various areas that we addressed. And it's not just the investments. I talk about all the retirement puzzle pieces. We're in tax season right now. Mm-hmm. I hope you're getting your taxes prepared. I hope you're not paying too much. And I hope you plan throughout the course of the year. If you didn't, now we're going to be on to the next year. Right. So, Kim, you said it before, plan now for 2026.
Sure.
Or maybe you're worried about healthcare and Medicare. Maybe you have no nursing home plan. That's not really fun to talk about, but 50 to 70% of us are going to need something. Mm-hmm. So again, tie all these puzzle pieces together. 10 years ago, as I mentioned, it's our 10-year anniversary. My goal was to have multiple personalities in all of these areas. And I can say, thankfully, over those 10 years, we have all these areas covered as an independent firm, not dictated by upper management, but as an independent, we can offer all this to you. And it just starts with a conversation, and there's not a cost for the conversation.
612-504-8400 is how you set up that first conversation. You can go to havenfinancialgroup.com, learn more about Haven Financial Group as they begin to celebrate their 10th year in business. Again, congratulations to you, Larry. It's a terrific anniversary to be very proud of. There's no two ways about it.
Thanks, Kim. Through that 10 years, we've helped a lot of people that didn't think they could retire or were worried about retirement. We continue to help them have the confidence in retirement, and we could do the same for you if you're listening. Just come on in.
All right, Larry, another great week. Thanks so very much.
Thank you. We'll see you next week.